Stocks slip on Wall Street as the US Fed leaves rates unchanged but predicts one more rate hike before the end of the year. Fed Chair Powell also predicts rates will remain higher for longer and says a soft landing for the economy is still a possibility. Asian markets opened with big losses on a weak handover from Wall Street. The GIFT Nifty also indicates a gap down start for the Indian market. And crude prices correct to a one-month low of around $93 a barrel after the Fed delivers a hawkish pause and signals higher for longer rates. The market looks ahead to policy decisions of other key central banks. Market regulator SEBI's board will meet today to discuss a range of issues, including extending relief to large corporates, raising 25% of debt from corporate bonds, FPI and foreign investments through various routes, and regulations for index providers. The Lok Sabha passes the Women's Reservation Bill. Opposition members welcome the bill but ask why it can't be implemented before the 2024 elections and also seek quota for OBC women. Home Minister Amit Shah says census and the delimitation exercise are important to implement the reservation, and the exercise will begin soon after the general elections. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we're tracking this morning. That big Q is out of the way. The Fed has held rates steady, but it was quite a hawkish pause because they pretty much indicated that there will be one more rate hike before the year is out. So on the back of that, you did get a weak handover from the US markets, and you have all of the Asian markets which are trading with some cuts, and it's pretty sharp cuts right now. So what's leading the losses is the Kospi, the Korean market, that is down 1.3% right now. Across the board in Asia, you're seeing some cuts come through. So the Hong Kong market is down almost 100 points. Taiwanese index down a whole percent. And, whichever market you look at, the Nikkei market is also down 1%. So it's a pretty steep cut between 0.6% to around 1%. The GIFT Nifty will also come up for you, and it is indicating that after that 230-point kind of slip that we got yesterday, once again, we are going to get a gap down, and it is currently looking like over 100 points, 115 points lower is where we're at on the implied open for the GIFT Nifty. So that's what's going on across Asia. But let's also talk about the US markets now, because Wall Street, like I was mentioning, ended Wednesday's trading session lower as the market reacted to the Fed's hawkish pause. So the Dow was down around 76 points. You had the S&P 500, which was down almost 1%. And then the tech-heavy Nasdaq was the worst performer. It closed with cuts of around 1.5%. Now, like we mentioned, the US Federal Reserve has reiterated its higher for longer policy stance after holding rates steady at the FOMC meeting. So we have CNBC's Steve Leisman, who's here with us to bring us all. Welcome back. Hope you guys are having a good morning. For the markets, it is looking like quite a steep cut that we're seeing across the global markets, and looks like we're going to start well in the red as well. So let's get you the trade setup for this morning. We have Vivek, Nigel as well as Surbi joining us now to really run us through how things are looking. Vivek, we were just going through the global setup. The handover has definitely been quite weak.
Absolutely right. The uncertainty and the likely hike, another hike that could come from Fed, has kept, global equity markets on tenterhooks. Weak handover from the US markets. Nasdaq especially bearing the brunt of the selling pressure. Oil prices yesterday too, actually saw quite a bit of a sell-off, down 1%. So Brent futures now closer to the $93.5 a barrel mark, and WTI futures hovering around the $90 a barrel mark. The talk of yesterday was the fact that Indian markets witnessed significant selling pressure, and especially it was the heavyweights that dragged the markets lower. HDFC Bank saw intense selling pressure, dragging both the Nifty as well as the Bank Nifty lower, and that actually caused significant selling pressure. Market breadth yesterday was quite weak, even in the broader end of the market. So mid-cap and small-cap space too saw quite a bit of selling pressure. But now coming to the primary market, the important factors, the whole host of IPOs, whole host of listings are still up. It'll be interesting to see the kind of subscription, that we are seeing in those. Yatra Online, yesterday was the last day of that particular IPO. Company saw almost 2.6 times total oversubscription. Sai Silk yesterday was day one, 7% demand. Signature Global getting 54% demand. So IPO market continues to remain quite robust. Asian markets as well as GIFT Nifty are indicating, muted start for our own markets today.
All right, Vivek, thanks a lot for running us through all of those cues. Let's also talk about the stocks that you should have on your radar in today's trading session. We have Surbi standing by with that entire list. Hi, Surbi.
Hi, Pavitra. So the first one on my list is SJVN. The government is going to sell nearly 2.5% stake in the company via an OFS. The floor price of the OFS is at 69 rupees per share. Cipla, the US FDA inspects the company's manufacturing facility in Long Island, and they issue 5 inspectional observations in Form 483. Infosys, the company collaborates with NVIDIA to help boost productivity with generative AI. Sheela Foam sources say the company is going to launch a QIP to raise up to 1,200 crores. Indicative issue price is anywhere between 1,078 to 1,169 rupees per share, which is nearly a 8% discount to yesterday's closing price. MCX, the company proposes to go live with the new trading platform by the end of this month. And lastly, West Coast Paper, NCLT Chennai approves the company's resolution plan for acquisition of Uniply Decor under IBC.
All right. Thanks a lot, Surbhi, for taking us through that entire list of stock-specific news as well. We'll watch for all of this. Finally, let me hand it over to Nigel, who's looking at cues from the futures and options space. Nigel, we got a 230-point kind of pullback yesterday. How are things looking for the morning?
Well, that's right. That could be the only bright spot, because it seems the Indian markets, they preempted that there's going to be bad news that came in overnight. Both the Nifty and the Nifty Bank, both of them ended at the low point of the day in yesterday's trading session. But I was looking at the F&O data, and there was no big shorting that was seen. In fact, there was unwinding of long positions, and this market had got overbought on the long side. So it's giving some part of that up. And now the long positions, even after the kind of unwinding we've seen, it's still at around 61% odd. On the option side, well, the 20,000 call, the 19,950 call, both of them saw a fair bit of open interest. The premium out there between 20 to around 40 rupees odd. Now, further reading into this data point tells you that there is writing being seen at both those two strikes. The 19,900 put as well on the put side has the highest open interest, with the premium at around 44 rupees. On the downside, on a closing basis, the bulls will like to defend the 19,800, 19,850 odd level. That's going to be very, very important. For starters, the gift would be suggesting we open below that 19,800 odd mark. So that's what will make the bulls a little bit nervous as well. The only factor that could be working for the bulls is that the PCR, from around 1.2 a few sessions ago, it's come down to around 0.79. In the past, we have seen when it goes to around 0.65, 0.7, it normally bottoms out. So let's see if that's the case today. The Nifty Bank, well, you saw aggressive writing yesterday at around 45,500 call. The premium out there was around 350 rupees odd. So at higher levels, that's 45,800 to around 46,000. You'd like to see firm resistance coming in there. Gift Nifty pulls back. Will this dip get bought into? Well, time will tell. But yesterday, we preempted some part of that. So maybe some part of the bad news in the near term is in the price. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues. That is how things are looking this morning as we get into this trading session. For now, we're going to move into a break. But when we come back, we'll shift focus from equities and talk all about the commodity markets, tell you what the Fed rate decision has meant over there. Welcome back. You're still tuned into Power Breakfast here on CNBC TV 18. And Manisha joins us now to take us through what's really going on with the commodity space. Manisha, that big Q is out of the way, the Fed decision, but take us through what that is really meant for the commodities.
Well, to start with the crude oil prices, and we've seen a second straight day of profit-taking coming in here. We've slipped from a 10-month highs. We are trading below $90 a barrel for the NYMEX crude oil prices, and the higher interest rate prospects from U.S. have led to profit-taking. In any case, at 95 and 96 a barrel, we were slightly overbought on charts when it comes to crude. But the decline in U.S. inventories is supportive. The fact that the U.S. oil output also continues to decline will be supportive for markets. So the view is that with the fourth quarter deficit estimates, and while we have seen some profit taking, the outlook for crude prices for the rest of 2023 is still on the stronger side. There also was a JP Morgan report overnight which says that the Brent crude prices could hit $120 a barrel as well on the back of tighter supplies before we end 2023. So most banks and brokerages still quite bullish on crude.
All right, Manisha, thanks a lot for getting us all of those details. So while there has been a little bit of a pullback, like Manisha was pointing out, we're still at very elevated levels, close to $93 a barrel on crude. But let's also listen in to Arun Kumar Singh, the chairman and CEO of ONGC, talking about this big rise that we've seen in oil prices.
It could be, it is possible that oil may hit 100, but it will not, in my judgment or in my personal opinion, it won't stay there for long. It has to recede for 2-3 reasons. One is right now rally is predicated on the fact that, winter preparation. And of course, this winter, normally this is the time when September, October, when everybody tries to prepare for winter. And second reason is that this price is not sustainable because of the simple reason that many economies can't sustain this price, and therefore the demand compression will happen the moment it crosses 100. So it may be a temporary phenomenon. I don't see it a permanent thing.
All right, that is the word coming in from ONGC. Of course, this was one of the few stocks holding in the green yesterday, and also for the month, it's done quite well, up around 9%. But with that, let's move on and talk about what's going on the political front. In a major development ahead of the 2024 general election, the Lok Sabha almost unanimously passed the Women's Reservation Bill yesterday. They proposed a legislation to reserve 1/3 of seats for women in the Lok Sabha as well as the state assemblies. And even the opposition backed the bill. Several MPs hit out at the Modi government for linking the legislation to the delimitation exercise and also demanded the inclusion of OBCs and other vulnerable minorities. The bill will now have to clear the Rajya Sabha test, where it will be taken up before the special session of the parliament, which concludes this week. Remember, even after it is cleared in the parliament, the Women's Reservation Bill will not be enacted into law before 2029. So that is important to point out. Today is going to be day 4 of the special session. So, of course, we're going to keep bringing you updates on what really goes through there through the day as well. But with that, we're going to have to wind down on this edition of Power Breakfast with the news that the Asian markets are really not looking good. It's been weak across the board. The GIFT Nifty also implies that the start for our own markets after that 230-point kind of dip yesterday will once again be quite a lot lower. 115 points lower is where we're at on the GIFT Nifty. Thanks for tuning in. Bazaar Morning Call is up next.